Good morning, traders. It is Wednesday, June the 12th. Taking a look at the charts, we've got the SP 500, and today I want to kind of show you the difference between watching the futures market and the SP5, the SPY or ETFs that mimic just regular trading hours. Now, I do prefer the futures market, but the regular trading hours does provide some insight if that you just might not catch if you're just watching futures. So if we take a look at the futures chart, you can see here we've gone from a red trend here on the trend analysis chart. This is a 30-minute chart of just regular trading hours. So this is showing futures, but only from 9:30 to 4 o'clock Eastern time. And then we've got the daily chart here, which is the full 24-hour chart for futures. So what we're looking at here is simply we're in a downtrend. We've gone orange bars, the market starting to turn bullish. And then yesterday we talked about this red hashtag, which was trading right up at this level, that the market was set to gap at that level or above yesterday, and most likely we had cycle high, the market was overbought. It's up at resistance on the daily chart. You can see we were flirting up at this resistance high, and gaps tend to get filled. And of course, talked about it selling off through that session, which is what it did pretty much the entire session, move lower. And when we look at the daily chart, this is a very bearish price action, but when we look at the daily chart of futures, it's actually looking pretty bullish. We've got this run up, we've got this nice tight consolidation. It's holding above the 50 and the 5-day moving average. Now, with that being said, I like to follow I like to watch them both, but the SPY ETF does give a little bit more insight for reversals in the market simply because most of the volume is traded during regular trading hours only, meaning during this small window, 9:30 to 4. And the futures chart shows you the price range of during the other 2/3 of the day where there's low volume and price just drifts around. So while this one looks bullish, if we go to the SPY, of course, the 30-minute chart will look the same because this is regular trading hours. But if we look at the daily chart during regular trading hours, the market gapped higher. It gapped up sharply into an oversold territory and sold down to close pretty much at the previous day's closing bar, which is very much so a reversal type pattern. And that gives us some insight that we should see some follow through selling. The big question is, are we going to come down to these lower moving averages as a support zone, or is it going to pick up speed more to the 20-day moving average, which will be working its way up over the next couple bars? Or are we going to go all the way back down to this lower end of this range where it found support previously, where we had our Fibonacci measured move and it put in a big bounce and reversal and move to the upside? So it's kind of interesting to watch this stuff. Futures sometimes hides these reversal patterns if you're just looking at the full 24-hour chart. But if you focus on the SPY, where the big volume is traded, it can give you some insight as to reversals and potential sell-offs in the market. Today, stocks are down about 0.25%. Money seems to be rotating into the safe havens. So if we see the stock market continue to sell off here, we're going to see precious metals find a bottom and continue to move higher. So very interesting. Keep an eye on those two things. It's best to watch the market from two different lenses, one regular trading hours, one 24-hour chart, to get a vibe of where the big volume is doing, what it's doing. So let's take a look over at the VIX. The VIX here, let's just, I'll just zoom out to the daily chart. The VIX, we played it, we ended up shorting it somewhere right up here, covering half here. It bounced and we covered the rest down over here for a 25% gain. Now we're letting it work itself out, but the VIX has been kind of fading down lower. And the stock market is putting in a top. There's not a lot of fear at the top. So when the VIX is low, it's usually time to go. So I think we could see the equities market pull back a bit and have a bounce up, and the VIX will move, or the VIX will move up. The stocks will sell off, and that'll also help precious metals. So we're just kind of waiting to see if we get some follow through selling today on the stock market. I talked about it yesterday with Corey Fleck. I'll post that interview talking about how the markets are all at this tipping point. Stocks at resistance, precious metals were at resistance, have pulled back a bit. The dollar's at support. A lot of things are all on the verge of either reversing or breaking to new trends. And that's kind of why we've been in limbo here for a couple weeks. We're waiting to see which way the markets here are about to shift. Are we going into bearish time for equities and a sell-off in equities and money rotating into the safe havens, and safe havens start to break out and run? Or are we going to see the equities continue to move higher and for safe havens to kind of trade sideways or lower for another several weeks or potential months? And that's what we're just kind of waiting for in the market to hinge on. So taking a look over at the gold chart, we played this pop and this run. We trimmed off our positions right up here near the high. We still hold half of our position, and we'll see if gold continues to move up, then we are in a position for bigger gains. You can see this upper range here where we are is very significant resistance. We need the dollar more or less to break down for stocks to sell off. That would trigger most likely the big rally here in precious metals and gold, and likely in silver and miners. So let's just take a look at silver. Silver, huge pop and then fade back down. It had a big bout of selling there, more or less coming back down to short-term support level. If you look at this price action we got right across here, we've got previous pivot lows. It actually carries all the way across to over here, so it's a very significant level that it popped out of, and then it pulled back down. It's also the 20-day moving average, this pink um, moving average line. So we'll see where things go, but overall we're kind of in this shift where we just kind of have to hold tight. We might dabble and add into a couple small new positions, but the markets are at a big turning point. We don't really want to get caught on the wrong side here. Looking over at miners real quick, GDXJ. Of course, GDX is very similar in terms of price action. Whatever gold does or miners do, the rest of the precious metals pretty much do at the same time. Usually bottoms and tops are fairly uh, related on the same day, give or take a day or two. But more or less, yesterday, stocks rallied, the gold miners rallied while the stock market sold off all day. That is telling us there's still this flow to safe haven. When money's moving out of the abroad market, it's moving into the safe havens. That's a good sign. The big question is this just a quick pullback, and we're going to see this continue to move up into the 33, 34 level, which is our next upside target. At this point, if we throw a Fibonacci extension, we can get an upside target based on the current momentum. And this is where we would expect price to go. If it starts to break out, we've had the rally, we've had the pullback. The first short-term target will be here. If we have a small pullback at the 618, usually means we hit the 100%, which brings us right into these previous pivot highs in the market. This is we've got our second target somewhere up at 34, but now based on this, if the market starts to run up, we're going to lower our target probably down to 33.75, maybe a little bit lower, maybe somewhere or through this area here so that we can hit our target and get out. If we go too high, the market will just miss us and it'll sell off before our target, and then we got to wait some more and hope it gets back up there. So we adjust our targets based on the legs of moves using Fibonacci, and that's where we stand for that. Looking over at natural gas real quick, down about 10%, a tenth of a percent. Again, it's trying to carve out a bottom very similar to over here. I think we could see natural gas bounce up. Talked about it in a recent article. It could work its way higher potentially here for a little bit, but we are expecting another drop potentially down to the $2 mark or beyond and create a significant play later down the road. This might be worth taking a stab and playing. There will be some resistance across this area, up in this kind of zone, all the way up to the 55, more or less this box area. There is potential for some upside here. Overall, if it starts to break down, though, it could be an inverse play to the downside for natural gas. Looking over at crude's still chopping out this bottom. We've been talking about this for a little bit. It's had perfect Fibonacci measured moves. It's now trying to carve out a bottom, and this is where things get choppy. We're expecting the market to chop around for a while. It still could poke down to some nominal new lows, and that's what we like. We like to see nominal new lows tagged repeatedly, and then usually it creates some type of kind of sharp breakout level that we can start to get into position for a much bigger run going forward. So coming back down, testing these lows, it still might make some lower lows as it tries to work out a bottom over the next week or two. Looking over at Bitcoin real quick, up 1% this morning. It has this bearish vibe to it. And just yesterday, finally, it started to give us some orange candles here, indicating the momentum is stalling out. There is the ETF, the GBTC. This is a Bitcoin Trust, and I'm not sure if we can short it or not. I've never shorted it, but I'm going to check it out today. Overall, I feel as though we've got a shoulder, a head, and a broken shoulder here. We're going to have a neckline, and more or less, this is a bearish formation, and the second half of the move would sell back down. This ETF doesn't move exactly as Bitcoin. Very much so, when money piles into this ETF, it outperforms Bitcoin. When it really has quite a bit of a skew to it. So it's a little bit of a high. Bitcoin's a high risk trade anyway, so this just adds to it. It's kind of like trading natural gas. It's can be a widow maker. So you got a small positions, but I'm looking to potentially short this because I think it's got room to come down to the lower end of this range, potentially break down and head towards this $8 mark for this fund. And right now it's at 980. So there's some pretty good downside potential here that could be very swift. Anyways, that's it for this morning, and I'll talk to you in a little bit. Bye bye.